Good evening. Good evening. Sorry, there's a little bit of feedback there. Hope you guys are doing well. Cheers, banditos, market bandits. To all you lovely outlaws, I hope you had a great week. I know a lot of people had a tough week. What up, Dari? I want to do another show later this weekend, or maybe early next week with some other people, start having some guests to talk about some things. I know CT is going to do a show soon. GR is going to come back on. So I want to do a quick one tonight, relatively quick unless you guys have questions. And then hopefully in the next week or two, we can get back to some long, like 2-hour shows where I just ramble and you guys want me to shut up or say something worthwhile. But tonight, we'll see if I can say something worthwhile. I should wear my glasses and change my character, so instead of being Gator, I'll be like the intelligent crocodile or something dumb like that. But either way, guys, happy Labor Day weekend. Let's kick this show off. Let's talk a little bit about seeing the big picture in the market and in our day trades and what we're looking for. When we take trades, when we enter trades, I'm going to talk about 2 trades specifically today that I actually typed into the Discord, and I want to talk about both of them and what I was looking at. So maybe this will help in some aspects for identifying trades and setups and putting stuff together, including some stuff I do in the pre-market. So with all that being said, I'm Gator. Welcome to our Fireside Weekend Review. All right, so tough week, I think, for many people. Very, very tough market the last 2 to 3 weeks. Some really good moves, but do take place. But the way they take place is different than they have been before. And if you're just looking at this chart, you're like, oh, this looks super easy. Look at all this. It wasn't that easy today, early on in the day. For instance, we talked about it in the pre-market. It was like, I said, I pretty much talk about longs in the pre-market because I was like, shorts are going to suck. Shorts are going to suck until later in the afternoon. You're going to have to chop around. You're going to have to mess around. You're going to have to break down. And then you're going to have to get a sell set up. And you're going into yesterday's levels, looking at like a daily. Let me don't jump this over to do something like that. And because you're going to be, into yesterday's levels. So there's just no... on pretty much all these names, you're at the top of the range. So if you don't break out and put in a nice leg higher in a lot of these names, the trading's going to be hard for a long time for most of the day. And you'll probably get some setups later, or we'll just chop around. Well, what did we do? We gapped up near resistance, and we needed to break out, use resistance as a bounce, and go. We didn't do that. We went down. There was a couple good shorts. I think we called out some good ones, and we had some good ones and some bad ones. But I want to talk about 2 specifically, and within the context of that, I want to talk about seeing the overall move. What can you do when you wake up? We're going to use Meta as an example. When you wake up in the morning and you're looking at this, and we're opening up right here, and you look left, you can very easily create an idea or a target in the name. Even without seeing what we did here, what do you see? The past 2 days, we have had a hard time getting above. You can see the top of this line. We basically had a hard time getting above 67.39. You could bump it up a little bit if you wanted to and say 67, 68 bucks. So what do we have? We have a stock that's gapping up, opening up at that level. At yesterday's high, we put in a little bit of a pop. We failed to get and break above Monday's high and even test R1, and then we shoot down. All right. What do we got? It's resistance. We have resistance. We have overhead pressure. And instead of using it as support and bouncing, it just fails. So we have a hard day. When you look at this, exactly, Dari, when you sit down in the morning and you look, like you could be like, oh, dang, we're just going to bounce this and we're going to rip. No, we're opening up. So what do I need to do to get a trade? What is the possibility of things that can happen here? And what do I need to be looking at? All right, so pretend you don't see this. You're looking here. You easily just look left. You're opening up right at this level. All right, so we could put in a nice little pop, hit R1 slightly above it, pull back, come back to, let's say, the top of this candle or the top of this one. Use that as a springboard to hammer off and then put in a leg higher to that 69 pivot that's been crucial in the past. or even $70. So we have a move to there. This is important because now I'm talking about something that is big picture, something that is beyond the scope of like a small like time frame. We're now talking intraday picture, creating an intraday picture. What up, Con? Oh, dude, I've missed doing as many shows. I'm hoping to get back to them. My kids were super sick from, not super sick, but they were sick most of the week and lack of sleep. And they were waking up crying like when I was like wanting to start the shows, and it was just like nonstop every 15 minutes. So 30 minutes, which is something else you have to take into account. But yeah, I really, I miss doing them, man, but I appreciate it. I appreciate the support. So when you're looking at that, this is a what could happen thing. And you say, okay, well, if we fail, we're going to come back in this area, and then who knows what's going to happen. Maybe we chop around and go higher. Maybe we don't. But it's just going to be harder trading. So in the same way, you can look for trades and what could happen on a multi-day level. We do the same thing on an intraday level. Before I left, well, let's talk about the trade that I saw that I called as a possible setup, and excuse the throat. A possible setup. I said, actually, I just said watch Amazon. So I said watch Amazon. We are going to talk about Amazon at right here. So at this point in the day, what do you see? A name that is stronger than every other name. You see higher pivot lows. Yeah, you pulled down some. And then you see low here. So I said watch Amazon at 1148 right here. So I said watch Amazon right here. Right at the start of this candle, below that 2 minute. Why did I say that? Look left and look at what the potential of this trade is. If you were to hold this and actually punch through this. So this, if I go to a 4 time frame chart, or I'll just do it here, but I have this one chart and then I have multiple time frames. So I'm looking at a 2 minute, 1 minute, 5 minute, a 15 minute, and an hourly, and the 2 minutes, the main one I'm looking at, but I have other ones. So I'm looking at all these. And what do I see at this point in the day at 11:48? On a 5 minute, 11:48, basically this one, you opened up at the bottom of this candle. You had a semi hammer on the previous one, like a little drop down, little pivot lower, not too bad. Instantly came back up, didn't test the 21, and we're starting to tick higher. So we have a 5 minute green takes red, green candle takes out a red candle. We have a 2 minute that's going through the 21 with some strength after failing to break lower. We have a 15 minute candle that, yes, you have previous topping bars here, but now this would have been the candle. It would have opened up at the bottom and began to tick higher. So pretend that this didn't go up and do this, and we know that it failed. So we're talking about something to watch. This is why I said watch it. Not that there was a specific trade there, but let's watch it. So you see that and you're like, okay, boom, and there we go. And then like, oh, well, what is the potential of this trade at this point? It was a shooting star. And once it failed, it was a good short. But previous to this, when I said watch Amazon, I was watching it for a long, and then you could have shorted it once it showed it wasn't going to break out. So this was a shooting star reversal on the 15 minute for a move down. But before that, it was a long, or a possible long. If it would have broke out, you had an intraday breakout if it could have held that 15 minute 200, and you had a multi-day breakout that could have got you a good 2 points or so in Amazon, around 2 points to maybe R3 at the max if the market was going to rally at this point. If it didn't, you have a little bit of a point. And on your options, you could have made 50 cents to $1 or so on a move here, on a breakout, on some nice explosion, because you were holding up and you were kind of wedging. Now it did a shooting star reversal, and on multiple time frames it failed. On the hourly, it actually, I think, looked really good here too. So at this one, you had, that's the 12 o'clock. So, you had this candle setting up and it could have gone higher. So there's a potential for something that is setting up. Why is the ? Shooting star? Did I miss something, or did I say something that was, or maybe you said that and I just saw it afterwards. But so we're not looking, I left and I didn't short this. I wasn't trading at this point. I had put the kids down. I was getting ready to go golfing, as you can, still in the outfit. But you did have a shooting star that set up here, so you could have watched Amazon. It failed to break out, and then you could say, oh, yeah, you could say it was a shooting star reversal here. Not super shooting star-ish. I would say it needs to be a little bit worse, but you could say that's a shooting star failed. I generally wouldn't short those into those moving averages because we could have came down here, wedged out, and gone higher. But I think the market started failing here or something, and again, I left somewhere. And Amazon was stronger than other names, so I wouldn't have shorted it, just being honest. But you did have that 15-minute breakdown. If you're looking at larger time frames, there was that trade there. Some people might have done that. The idea, though, is what you were looking at. What was the potential for the trade? The potential for this trade at this point when I called it out was I have an entry on a 2-minute time frame or 1 minute. Grid takes green. It's holding up. We had a little bit of a lower pivot here, so it's a little sus, but it did set up. It's triggering higher. If I'm entering it here to the long size as it breaks the 21, I have a trade that if it goes and my entry is here, my stop is down here, so I have a 374 entry and a 352 stop. Lower it down, 340 stop, for me anyway. So you have an entry with this 20-cent stop on your Amazon. This is what, 10 cents on your contract? So what's your risk? 10, 15 cents, 20 cents max, depending on what option you take. And what's your upside potential? A $2 move, basically. So you have a breakout and a push up. You take this, take a little bit of profit off here because it's failed here. So take whatever, 25% off. And then if it actually breaks out and explodes, the market rolled over here. If the market hadn't rolled over here, Amazon strong, you get this name to actually push and you get this one to go higher, you have a potential of a 2-point move. So when I'm putting a trade together and I'm looking at, okay, what could happen here? What am I thinking about? I'm not just looking at something in a vacuum. I've got this chart zoomed out. I'm looking at stuff out here and I'm zooming in and I'm flipping, I'm hitting the space bar and jumping between different names and stuff. But I'm looking at this and I'm looking where names are at relative to the market, where the market's doing, using, JR's commentary or other, well, it's the only room I'm in. And, maybe if CT or Mitchell or Rose or somebody else is in here saying something, but, and putting that together and then saying, okay, what's up? What's happening? What can I see? This is the potential for the trade. And when I said watch Amazon, I wasn't saying, hey, get in it. I'm just saying watch it, look at it. And I never tell anybody to do anything. This is all my opinion. I'm never going to offer you stock picks, investment advice, or anything like that. What you do is yourself. But what is the potential for this trade? You have a lot of potential with a very small downside. So you have an easy identifiable entry with a easy low risk identifiable stop with a roughly 4 times target, and you're going to take some off here and then somewhere in here and here, and you could probably fib this. If you were to do this move here and fib this line, you also would look at this. So let's throw the fibs into it too. I might have had this up now. You have this, like what happened? We never tested the 50% retracement. We came back down. We hammered off of the 38% retracement. I know it says 61. These are inverted for the target. So inverted, you came up, you didn't hit highs, you're bouncing around the 21. There's still a good chance that this is a long. This has the potential for that trade. Now the market rolled over, that's fine. That's why I'm talking about this when the trade didn't work. What's the idea? What's the big picture? What are the things that are setting up that can make it happen? What's your risk reward? What's your potential for that trade? That's part of it. All right, so now part 2, or I should say option 2 on it, is not taking too much size in something like this. And we're going to flip it and we're going to look at a trade that did work, which I said in the VTF and I said here. You could take 100, 200 contracts of Amazon depending on what your size is at, depending on the size of your account, but that doesn't mean you should. You need to, based on where you're at in the day, be able for this trade not to work and you be okay with your loss. If you got in this trade with a massive amount of size and your mindset was home run or bust, you're wrong. If your mindset was home run or bust, you've already lost. You've already lost the trade because you put yourself in a losing place for the trade. You can't. You're just going to either, it's going to be there or it's not. And a lot of times in a hard market, it's not, because you're going to get shaken out and you're going to get scared. And if you have a shakeout hammer or something, or it doesn't go right away, you're going to get out and then you're going to get back in, and you're not going to be in a good mindset. So you also have to practice proper size discipline on your, on the trades that you take, on your contracts. So both of those things, or I should say all of those things, are an important part of entering a trade. Now let's look, or putting the trade idea together. Now let's look at another trade that I typed in the VTF that actually worked. I already have this fib line drawn. So let's see. So we're over here. Meta. So let's look at Meta really quick. So Meta, we have I don't think I would have drawn this one. When did I call Meta short? 1227. I said if in the Discord, if Meta sets up for a short, maybe a pop into the 200, you have room to 162.28 to the downside. And I was like, there you go, Meta. See you guys later, because the trade worked. What was I talking about? All right, so we're going to look at this on different time frames. What do I see relative to Meta and the rest of the market? All right, we look at Amazon. What was Amazon doing? Amazon was strong. Amazon was going up. Amazon was outperforming the Qs and all of these other names. Amazon was, I'm zooming out to look what the Qs were doing. The Qs were actually at the top of the day too, and they were kind of wedging. So was Amazon. But if they would have gone, you would have had a good time. They did a... So, at 12:27, 11:48, 12:27, so 20 minutes later, 30 minutes later, this is what Meta did when the market broke down. Meta was through what? Day lows. So let's look left on this. Let's delete this fib line. Let's look left on this chart. What do I see looking left on this chart if I am only looking at Meta right here? Look where this line's at. What do I see when I look left? Let's zoom in a little. First, you see support here. You see some support. So you see some support areas. Okay, so we have a support zone. What happens when a support zone breaks or get punctured? With some volume. So if the market's going to fail and stocks are going down and Meta might go down and it's at support, what happened at support? We had a failed break. We hit it and we stopped. If you look at this, we hit it and we stopped. We'll just throw a line there. We hit it and we stopped. We hit it and we bounced up a little bit. And then we chopped around. So we're chopping around at support, but we're below all the moving averages and they're facing in the right direction for a short. We are at this time below day lows. So on your daily chart, we're below day lows. If I were to look at a 5-minute chart, 1232. 1 minute chart doesn't really matter for the context of this. 1232, so 1230, between 1230 and 1235, if you break down, you're below the 5-minute 200. So I have this up right, the 5-minute 200. So if we pop up and hit the 200, which is what I said, or pop up towards that 200 and then fail, you're going to fail the 5-minute 200. So you have no support below you on the 5-minute. On the 15-minute, 1235, we are below. This is probably 1235 here where I'm at. I'd have to look at it as 1230. So 1235 would have been in here. So it actually went down. So your room here, you had some support on the 15-minute 200. So you might want to be aware of that. And then the hourly, you had an hourly, hourly doesn't really matter in the context of this, but you have a previous ugly hourly candle, the 12. That's your 12. You're towards the end of this. It's your 12 candle. 11, 12, and then you're probably somewhere in here. So you have an ugly candle. You're at day lows. You're below day lows. So in the overall idea of the trade itself, you are below today's lows. Okay, so I am now trading a weak name with a market that is rolling over or looks like it is failing. I've identified a name that I like to the short side. The moving averages are in the right direction. We are right at or below support. There is an identifiable target. Let's say a pop into the 200. So I'm going to wait. I'm going to see if it can get above and hammer off into somewhere up here. It pops up and then just instantly fails. It doesn't even test the 200. Instantly sets up on a sell setup, and then there you go. This target actually worked. And I actually said before this broke down, 162.28 would be my target. Why do you think, if you're watching this, 162.28 is the target? Before I go back and show, who wants to guess in the chat why 162 is the target? I'll give you a hint. Well, I mean, you can see 161.38 is an obvious target. Previous support line in S1, so you definitely have 162.38 as a target. But let's zoom out. Why did I say 162.28? Look at this line right here. Because this is where your last leg up, really, I mean, you could say it was from down here. So this is also, my face is in the way. Let me move my face. So, because this is where a leg kind of accelerated from. Yes, you have a breakout here. So down here is your real ignition of this leg, pull in consolidation and continue. But you have a breakout here. And if I were to fib this, and I was to do this, 162.34 is the 161 of this move. So if I was to fib this move, which is your previous down leg and meta that got you to day lows, we get a little bit of a pop and a shakeout to the downside. I enter when I see it's failing, not getting out to the 200 or above the 200 with a stop. Let's say you have a wide stop and you don't take a lot of size and you give yourself, to the 21. Or you just give yourself to the 200. Like even if you just say, hey, as long as a candle doesn't close above the 200, 163.74 is the top of the candle. I'm going to give this to 163.96 or 164. So 30 cent, 40 cent, that's 20 to 30 cents on my option contracts. I'm going to take 20 contracts because I can afford to lose $600. And I have a downside of, a full point here to the downside. I'm going to make a lot more than that on my contracts if we hit that target. And I'm going to take some off here on this drop. And this was, I was actually here when this happened. This was like a 80 cent pop in the options that I was watching near the money. I left before this happened, but this was a I don't know. I have no idea. I'd have to look. I'd imagine if this was 80 cents, this was probably $1.50. And on 20 contracts. And let's say, because I was here when this happened, you wouldn't have sold here. Like this happened pretty quick. So this would have moved down and you would have, been up 80 cents. You'd sell 20 of them, or 10 of them, sorry. So you make $800. You hold the other half to the target and you made $1,600 for a $600 risk. Something like that. I'm using a hypothetical idea for creating a trade and coming up with a reason to take a trade. Both these trades that I just showed you have a reason, a big picture reason they're working, a 5-minute, a 15-minute, an hourly candle, a daily setup. All of these things are in play within the price action, within what is taking place. Both of these trades to me are good trades. One failed. No, if you took some profit off, you could have still made money. The full trade idea failed on the Amazon one. This one went and hit target. Would I be mad if I lost in that Amazon trade? You shouldn't be, no. Why not? Because you had a big picture. You had everything that was happening, a strong name in the market. The market at that time was strong. It was going up. You had a chance to break out. Then it failed. That's fine. The trade was there. The potential was there. It was a good idea. It was working. And then it failed. Practice risk management. You're okay. You're not toxic. If you take 15, 16, and sometimes you take those and you lose them. But if that was a good trade, you're like, man, that was a good trade. I like that trade. I traded it smart. I took the right size. It didn't work. All right, let's find the next one. All right, 30, however many minutes later this was, 20 minutes later, you come down and you sit down and you're like, you know what? Wow, names that are weak. Meta's weak. Meta is below day lows, at day lows. Man, if we crack day lows, where's the next area of support? If it cracks day lows, we're definite, like there's a good chance we're going to put in a move down to here. Let's see if there's any like other indicators, fib lines or anything else that can get us this target. Yeah, there are. And maybe there's other factors that make you want to hold it longer. Maybe you have a bigger measured move. Maybe you think it's going to fill this gap. Did we fill the gap? There's no way. No. Maybe there's a different target you have. Maybe this is your target and you think you're going to take out yesterday's lows or at least go to it. This would actually be support. I really wouldn't hold past this generally, but you can if you want to. That allows you to take proper risk, proper potential for reward. The idea of a whole of a trade, everything that's going on with the market, with this name, where this name plays in with the market the last 2 to 3 days, where it's at in the price action of the last 2 to 3 days, what pattern it's setting up on. So what pattern did it set up on? We talked about Meta earlier. I'm sitting here at 12 o'clock. What do I have? I have a history to look at. So I zoom out. What do I see? I'm like, dang, we have a triple top in Meta that failed. We have, I'm sure there are other patterns you can look at, but we have, okay, we came down and hit support, day lows. We bounced. Dang it. We bounced. We failed to even retest the highs. And then we rolled over. We put in a move down, which probably is some type of measured move. Actually, this actually ended up being the measured move, and this would have been the target and stuff. But, we put in an actual leg down. We consolidated up into the 21, and then look what happened. So we went down, we broke down below the 21, we bear flagged, we came really close to hitting the 21 or just about hit it, and then we broke down. We didn't even stop at the 200, we're so weak. We flushed the 200. At day lows, we sat around. We didn't even catch a bid down here. We just stopped selling. And then we bounce around at day lows. We get a little bit of a weak pop that doesn't even hit the 200. And then we, boom, sell setup. You can tell yourself that story and put that context of everything that's happening when you're not sitting here hyper scalping every 5 minutes. Now I'm going to find this, where the Qs are doing this, where this is doing this, where the SPY is doing this, Google's doing this, Amazon's doing this. Sit back, got my coffee, got my Wawa, as my kids say. Let's see what's happening. What are an idea? It's like, oh, dang, Meta looks so good down here as it's going down. None of that. What do I want to trade? All right, so it went down. It bear flagged. It's coming into low a day. Let's see how it reacts. Oh, this is how it's reacting. Then I called it out at 27 or today at 27, whatever time it was. Watch for Meta to pop into that. Then there's your short. It didn't quite hit target, but the idea was still there. I would have shorted it on that, and then there you go, and then there you go. And there's your target. It hit. And then, you could come up with another trade for it failed to get back above that. You went down. I'm not getting into that. But if you guys are watching this, past this, and you see what I'm saying and what I'm saying makes sense, leave a like, share, and subscribe. Hey, shameless plug. Or drop a comment and say, maybe I need to clarify something. If what I'm saying doesn't make sense, then maybe I need to clarify something and say it in a different way or articulate it slightly differently. I try to do it live when I talk about it. in the like during the day when I was sitting there on there talking about this. And this is what has been saving me this last week. I have not made any money hyper scalping names. I have made money solely doing stuff like this. Literally sitting here, finding good trade ideas, some that work and some that don't. And a lot of them, it seems like more so than normal, have not been working. But that's okay. And I've been sitting here. I've been trying to control myself early, waiting for these patterns to set up. Seeing something like this. I mean, this would have been a screaming short if I was paying attention. Instead of looking at Amazon long, I should have been saying this short. 11:48. When was that? 11:48. Yeah, after this failed here and you had that pop, I should have been looking at this and shorting. This would have been a screaming short. Not really screaming. I actually think I did look at this, and it was in between the two levels. I'm like, guys, I don't really like anything because I thought that Meta was a short to the 200. I don't know why I didn't take it. Doesn't matter. Probably because you also had the pivot below you. So there's a lot of reasons not to take this one. But once you're down here and you're looking at it, there's no reason not to take this one because you have a tight stop if you're wrong, low risk entry on a 4 times, 2 times, 3 times reward, depending. Don't go too heavy so you don't get shaken out. We know how Meta does. So 10, 20, 30. I don't know. I'm not telling you how many contracts. Take 3 contracts. I don't care. Put your trade together, your idea together on watching it, and then execute the trade. Put your stop in place. Allow the trade to go through. Once you're significantly or at a level for profit, take a little bit off, as it were, finance your stop, and let the trade go to target. Or get stopped out. You know, that's just my opinion on what I'm doing. I'm not telling you what to do. I would never tell you what to do. And I'm not saying take 50 of these. I'm saying maybe there are 5 of these a day. What up, Ralph? I'm saying maybe there are 10 of these a day. Maybe there are 3 of them a day. I also called Lulu short to 315 and it went there. Once it broke down. Not that I held that one. I didn't like how the options were playing. So I didn't do it. I got really good PI. I did it once. I had like 70 cents of PI in a Lulu contract, but I just wasn't in a risky mood today. Going into a long weekend, I was like this. I hate earnings names and they can rip your face off. You know? So NVIDIA bear flagging. Meta. So 2 trade ideas. The whole point of this show and why I'm coming on here, Friday review, is to show you the one that worked and the one that didn't work. And I think they're both good trades. And I'm happy with both trades. And the Amazon one didn't work. And the Facebook one did. But do you see what was happening and what was happening, the overall price action movement and the different setups that were happening, your potential target, your potential risk, your entry and your exit. And actually, I made money on that Amazon trade. I actually took it and I think I made 15 cents on it and then broke even on the second half because it failed. And I think I was going to go put my kids down for a nap. Yeah, I was going to put my kids down for a nap. So it started popping. I was like, I'm just going to get out of this. I don't feel like it. And I got out of it because I was going to help with that. So when the market is hard, like it is now, when things are difficult, you have to be able to zoom out and see the big picture in the market and in your trading. So this is a twofer. You need to be able to see the big picture for the move and the trade that you're trying to take, the idea behind it. That's what I do in these morning shows when we come on here and we talk. I'm like, I like this, and then these are the potentials, and this is what I'm looking for to happen. What I'm saying is these are my thought processes through these trades. I'm waiting for something to set up here. And if a setup comes within the idea that I'm now creating, I'm going to be looking for setups within that. What do those setups look like? I don't know yet. What do they look like? They look like this to the downside. It would have looked like the reverse of this to the upside. We bounce up. We test R1, maybe punch right through it and pull back down a little bit and bounce off of Monday's high or 2 days ago's high. What was that? What was 2 days ago? Wednesday? Wednesday's high, and we put in a hammer to that level, and we rock it up, and then my target's going to be like $70. That is the idea for the long that I've come up with. It was kind of the same for the Amazon trade. And it's the reverse for the short side in this one. And you can sit here and you can do this in these names and identify why that was a trade during the day and put that together and take a few of these. And if you only do 5 to 10 trades of stuff like this a day, you can make a living. In assuming you cut your losses, you're going to have losses, and you take the appropriate amount of risk reward and risk management and all of that, and maybe don't rush into things, and understand that sometimes patterns have to develop and go, and you're going to take losses, and it's part of it. And oh, dang, I'm tired. Man, golfing takes it out of you, but it's more relaxing than the market this last week. No joke. I'd rather lose. I lost 3 balls today. I played last week I only lost 1. That was like on like the 16th or 17th hole. So I played pretty much all game with 1, and this time I lost 3. I was kind of being dumb a few times. I was just kind of smacking some of them around though. Did I hit any of the water? No, I didn't. None in the water today though. So then the actual the mental part for beyond this, you have to keep the big picture of yourself as a trader in perspective. Mitchell was talking in Discord the other day and talking about how he had lost, how it was hard for him to make money. It's easy for him to make money, but how he's been taking outsized risk and it hurt him. Other guys have said the same thing. CT said the same thing. I said the same thing. Peacock said the same thing. Others have said that same thing. It's like, man, it's so easy to give back. It's like, I've given back a car. I've given back 5, I've given back like my old salary, this week alone or something like that. Like there are people that have done that. I've done that before. So easy to do, and you lose perspective. It is important to keep the big picture of your trading in perspective, and that consistency picture that I show for whatever reason, like way too many times, but not really, is why consistency matters. It doesn't take a lot to be at these levels. But if you're not on the world of Dolby, but if you're not, and you're losing sight of the big picture because you want 5-figure days and this and 4-figure days or high 3s or whatever it is, and you're trying to smack the crap out of this stuff, and you're just trying to make money and make money and make money, and you're not practicing risk management and keeping things in control, and understand that you're going to have a week or two of hard trading where it might be hard to make $1,000 or $1,500. It's going to be a lot harder if you're mentally beat up from taking bad trades and you're taking outsized size and you're trying to make it all in one big hit, as opposed to stringing together good trade ideas and those ideas working. When you're losing sight of consistency, you're going to lose sight. You're going to start losing, generally speaking. You're going to begin to lose. It's going to begin to get harder to just do the little things right. It's going to be harder to take this meta trade because you know what you did? You outsized in this Amazon trade earlier and you didn't practice proper risk management. And maybe you got in it up here and then you got stopped out and then you decided to get back in it and then you just held it and you're like, I didn't hold it last time and it came back. I'm going to hold it this time. And then you lost down here and then you're done. What up, Elizabeth? Or you do something else and you start doing other things and, or you took you took way too many losses back here in the beginning of the day. And because you were just hyper scalping everything and taking too many wins and too many losses, a lot of things got really difficult for you. You start putting those losses together, and then you're so mentally taxed after this that you took this trade and you didn't trade it right. Okay. You took that trade and it didn't work. And then you come in and you can't take this one that you know is a good trade because you're scared because you just screwed up the last 2 hours of trading, 3 hours of trading. And that's what happens to a lot of people. and your stop, and the good trades didn't come in the first 30, 40 minutes. The good trades came when we had a day range set in. Here's your range. So we have a range. We now have it coming down and a break of the range. It would have been the reverse in Amazon. So it is extremely important to save your mental energy, to control that, to keep that in check so you're not worn out, so you can see setups. Like I don't follow JR into trades. I'd make more money sometimes if I did. Probably not. I'd probably lose. Not because he doesn't win more. He makes a lot more than I do and is a lot better trader than me. But I follow JR into trades when I see what he's doing and I agree with it. Case in point, Tesla. JR was long Tesla here, I think. Correct me if I'm wrong. I'm not saying this was wrong. His target might have been VWAP, and he might not have got shaken out here, and he might have made his money here. And he probably took some money off, and he probably made money on the trade. I didn't like it because I saw something like this happening. I saw the possibility of this happening. I didn't want to take it. I didn't want to trade this. Amazon or Tesla looked like Meta to me. It looked weaker than the market. It didn't look like something I wanted to trade. I'm not dissing his call. I'm not dissing his trade. Dude's an incredible trader, amazing mentor. I absolutely love him. This was not a trade for me. He could have also been looking at this. Excuse the coughing. I really have to fix that. He could have been looking at this. Look at this. I mean, he could have been looking at this, and he could have done something like this, and he could have saw this happening, and he took this, and he saw this, and he's like, you know what? I think it's going to test the top, so my target is 278, whatever. I'm going to get off halfway, so I'm going to take this with a stop down here, and I'm going to let this wedge play out, and I'm going to get it up here, and I'm going to make some profit. This could have been his trade idea. So looking at it now, if you looked at this and you had drawn this line, you would have been like, you know what? I see this. I'm going to buy off this line. I'm going to sell some at VWAP or here. I'm going to let it chop around on me. I don't really care. I'm going to take small enough size to where, I can take $1 loss or whatever on my contracts, and I'm going to let it pop up and do. I have no idea. I'm just making up an idea for a trade that I possibly see. It's set in a higher pivot low. That means we should go up and come in here and either retest or create another lower pivot and do this, and you see what it does when it broke down and then popped up, and there's some shorts in there, but maybe that was the trade idea. I didn't take it because I didn't like that. I didn't like a descending 21. I didn't like being below all these moving averages. And yeah, it ended up working, but I guess I don't know what the trade idea was, so I don't know if it worked. And there could have been other stuff too, the previous day, the breakouts from the previous day, and all that. That all being said, you have to know what you're looking at. You have to identify the trade, the risk, what you're trying to do with it, taking the appropriate size, taking the appropriate precautions to take the trade, understanding why you're doing it, what your trade plan is for this specific trade, and then taking it and letting, and then following that plan and trusting that plan. And you can't do that if you're beating yourself up on 50 to 100 losses before you get to this trade. Maybe you see something like this and you're like, oh, I like this, or JR likes this, or Gator likes this, or, they whatever. So I'm going to take this, or, I see this here. I actually would have liked the second test. We test here. I'm going to take this, and it's going to go all the way up here just because they like it. And my trade idea might just be, I'm just longing it into the 21 off of this ascending line, just into the 21. I'm going to catch 30, 40 cents on, 10 contracts for a 20-cent loss, and I'm going to make 40 cents, and then I'm going to sell them. And you're like this, and then you get, I don't know, maybe it comes down here and you didn't get a good feel, and so you break even and you're toxic, and who knows what can happen if you're just sitting here trying to guess every single thing that's going to happen. I'm not guessing I mean, in a sense, you're always guessing, but I'm not just guessing in a vacuum of what I think is going to happen. I'm trying to put together a story of even what's been happening over the next couple of days, the last couple of days, by looking at a name, by looking at what the price action is doing on that day, by putting it together and saying, I see this, I see this, I see this. This could be happening. These are the levels that I see. Where's my low risk entry for a short? If you're doing this is what I see a short here in Tesla. Failing to get above VWAP here. I'd have to go back and look at some other. I don't think I was trading this yet. 5 minute, 15 minute, a little bit harder. You know, you look at this, and when you're at this level, it's like, could I make a good case for a long or a short here? What is the case for the long or the short here? This is just wedging out. What's going to happen? It's going to go somewhere. And I think some people are talking about this in the VTF. What can I wait for? Well, let's wait for a confirmation. I can wait for a confirmation of a down move and take a trade. I don't, see anything specifically other than, a red takes green. Let's see if there was another red takes green. That was one. Chopping around, you could say that as you broke this range, you could try a short. But if you didn't take the proper size here, you would have been shaken out on these shaky candles. And this move took forever. This is like a $3 move that probably would have felt like forever with a lot of whippy candles. This would have been a very difficult trade to take. I didn't trade Tesla today, really, because of that. 15 to the 21, I don't like this. I like it in theory, maybe, but generally speaking, I don't like this. I hope what I'm saying is making sense. I'm hoping, like, you can't be like, oh, I'm going to take this breakout. Oh, it didn't work. I'm going to take this one. It didn't work. Oh, I'm going to take this. It didn't work. I'm going to take this. It didn't work. And just take 50, 60, 30, 10, 15 losses here, and then expect that you're going to be able to come and to relax and to look back and to see what the market is doing and identify a name in a thing that in a pattern you see, in a recognition that you see, with this entry strategy, green takes red, know your limit 8, know your limit 21, VWAP, whatever it is, and put together a setup or put together a trade idea to take that trade and have it work. If you're sitting there getting destroyed early in a choppy market with low volume coming into the weekend or over the course of the week, once you've identified that things are hard, you need to be able to find what you do well, identify it, and just take the trade and put it together. You don't have to use all these different indicators. I'm showing different things because there are many ways to do it. You don't have to use any of them. You can use one of them. You can use 50 of them. It doesn't matter as long as you can do it and put it together and get it to work. You have to find what works for you and how it works for you. You're able to do that. You're able to begin to identify the patterns that are setting up. And sometimes stuff just breaks down without anything. It doesn't have to be a reason. It doesn't have to be something. You can say, oh, you have a head and shoulder. That's not a head and shoulders. Break. I don't know. That's not that. You can identify that the market's going down because Apple's just tanking. Like, dude, Apple's tanking, so I'm going to look for shorts because the market's going to be coming down. Just riding the 8 train down here. Wedge failed to break out. This market's in so much trouble. We are going to have a nice, absolutely massive gap down or move down in September. The 50% retracement of this move in Apple, by the way, is like 50 to 70. You might want to watch that level for a short-term bounce to put in a higher pivot low, back up around the 200, around $60, and then a short back down to the, if the market wants to go back down to $38. I'm making stuff up. Don't listen to anything I say, but, you do you. I'm not telling you what to trade or how to trade it. Yeah, I guess, if you have 52 and then a break of that, should get you down to $38. Either way, don't trade off of anything I say. These are my opinions. That is my thought on trading in this very difficult market, on staying alive in this difficult market. It's not about making money. It's not about smacking it early and making it all in one play. It's not about home runs. It's about consistent, good swings, whether or not it's a base hit, good swings, putting the bat on the ball, as it were, knowing why you took it, that you're happy with that you took it, that you're good with loss. I was happy with that Amazon trade. I sold it because I went to the kids and that actually worked out. But, I'm happy with that trade. And if I would have got stopped, I'd have been happy. I've been maybe annoyed because the price action has been a pain lately. But overall, happy with that trade. And then coming back, not mad, not toxic, being able to identify another trade that I like in Meta and taking it 30 minutes later. I didn't take a trade in between those two trades. I don't think. I don't remember taking one. And then you see, then you see that and you take it. You have an hour there in between, and then you take a trade and it works, and then you're good. Or you can sit there and you could try to catch every little breakout and every little thing, and your mind go a mile and wear your mind out, wear yourself out, and then you're done. Then you can't identify good setups. You can't identify good trades. You're just crazy toxic because your losses and all this other things. And it'll eat away at you, and then you'll just be exhausted. You'll come into the next day dead, feeling like nothing works, like you suck, like you can't do it, like you're useless. And it's just part of this job and how it works. And I fall into that same trap of those hyper scalps. And I do it now, but I can't do it now because Tesla's not here really to pay me like it used to. With the post split, it doesn't pay as well for some of those hyper scalps. There are some I can get 10, 20 cents. Like I'm starting to finagle it a little bit with one contract trades, practicing, because everybody knows I love my hyper scalps when I see a trend and I need to make some money. But generally speaking, those moves like that meta move, like what I was looking for in Amazon there, are what's been working. That's how I'm practicing seeing the big picture, staying consistent, not taking as many trades, and doing ones that have both the big picture and the small picture put together that allow me to keep the big picture of myself as a trader in line. So all of those things work together for my success, to provide for my family and all this other stuff. Market's been difficult. Market's extremely hard. I know it is. Keep your head down. You don't always have to make a bunch of money. You just have to survive. If you've lost and you're losing and you've dug yourself a big hole, there's absolutely, don't dig the hole deeper. There's nothing you can do tomorrow that's going to fix it, except making intelligent choices. And intelligent choices are those small wins that add up, that will allow you to slowly gain your confidence back, to take the correct size and do all that, and put the building blocks of success back below your feet, so you can get to where you need to be successful and to maintain that success day in and day out. And then before you know it, you won't even remember, as it were, as bad, like the time that you're in now won't be as bad looking back because of how well you did in recovering from it. So think about that. That's my Friday evening thoughts. A nice wrap up. If you guys have any questions, feel free to leave them in the comments afterwards. I'd be glad to answer them. You can throw one in now while I'm doing this if you would like, but throw them in. Yeah, drop them in the comments if you like this stuff. You can always leave a like. I do appreciate it. It does make a difference. Comment and share, subscribe, all that stuff. If there's somebody else that's struggling or they're having a hard time, maybe not zooming out enough, or they're only zoomed out and they're not zooming in enough, or they're not seeing the big picture, what is, I hope this helps you. If it doesn't, I'm sorry. If you're struggling, feel free to reach out to me. I can't promise that I have any words, but I know what it feels like. I've been there. It's very easy to get there, and we all go through cycles just like the market, and you're going to go through cycles in this. It's not straight up sometimes. So keep your head on your shoulders, keep pushing through, make intelligent choices. That is all you can do. Make the next thing you do the right thing. So thank you guys for hanging out. Love you guys. Cheers, bandits. Enjoy the long weekend. You deserved it. You definitely deserved it. You earned your money this week and over the last couple weeks. And even if you lost, it's okay. So I'll see you all next week. Trying to think what I have going on. I will not be trading the very end of next week. Obviously we're off Monday, so maybe a show Monday night. Not sure. But I'll definitely do one or two next week before I leave. Got a wedding to go to next week, so on next Friday. So yeah, I will trade. Actually, I'm trading every day next week. Yeah, I'll just leave Friday afternoon. So you guys are the best. Love you guys. Have a good weekend. Relax. Just detach. Enjoy life outside of the market. And and come back ready, clean. Come back clean and ready to go to work next week. Because that's what we got to do if we're gonna sit down here and do that. Be intelligent, make good trades. We're bandits. We call ourselves bandits for a reason. We rob the train and we leave. So later, guys. Have a great, amazing weekend.